Welcome. I wanted to get your thoughts on that recent run-up in silver, but first let's talk crude, let's talk energies, because they're catching a bit of a bid as well. Right up to that $55 level. They've been in a bit of a range between 50 and 55 recently. What's that telling you right now in terms of seeing this move up?
Well, I think we're getting a bit of a breakout here in crude oil. I mean, WTI out above 54 bucks. Holding out above 54, it really should pave the path of least resistance about 57.5. So that's what we're looking for on it. But I mean, this is, as you mentioned, silver first on. It's a broad commodity move here. Silver is ignited sort of a fire under the commodities. Ags aren't participating much, but you're seeing metals and energies really start the week off good. Risk on in equities as well. So they're all working together here. I think obviously metals taking a little bit of a breather right now.
Yeah, ags had slowed a little bit, but I just heard on the radio this morning that corn just posted into a new high amidst some demand out of China. So actually, let me just pull that chart up. While I do, I wanted to get your thoughts on the silver run up. A little bit of a different beast than what they've been trying to do here, it seems like, in terms of running it up on individual stocks like GameStop and AMC and some of those other names. I mean, this is, once you start to enter into the futures markets, you encounter different hurdles to overcome, one could argue, in terms of being able to run the price up. And then on top of that, here's a quick look at corn recently into that high yesterday. So grains, while the beans and the wheat have slowed a little bit, corn definitely participating. Bill, you're talking about one other thing that really stood out to me in terms of the silver trade was I heard that it was actually the CFTC commitment of traders was a net long position there, not a net short position.
Well, absolutely, and it's not necessarily a short squeeze. I think people are looking at it
okay.
Wrong, but I don't want to say wrong, but what really matters here, I think, is the potential physical delivery. Now, you look back at last year and say that July contract, really, when we made that move, record in gold and a big run up to 30 bucks in silver after that in August. But when we moved into July, there was high demand for silver to be physically delivered via the contracts on the exchange. Mm-hmm. And, at that time, you're saying 90,000, 100,000 open interest, maybe 1 or 2% of those typically would ask for physical delivery. You're talking about, 1,000 to 2,000 contracts. Last year, there were something close to 20,000 contracts being asked for physical delivery. And that's what equates to about 10%, almost 10% of the world's production of silver for 1 year. And that was requested for delivery on the exchange in one delivery month. So that puts in perspective what's really could happen here. It's the delivery issue, and then how can really contracts become for delivery is the options. And I think that's the interesting scenario here is if silver gets out above $30, say 30.70. 30.70 is the 50% retracement going back to 2011 to that new pandemic low that it made. Because silver did make a new low since the 2011 high just last year. So it washed everybody out. So that range, 50%, is $30.73 or so. We get out above there, you have enough contracts. There's about 3,000 open interest at 30 bucks. There's some all around it. There's obviously contracts from 26 to 27. But you put enough contracts in the money, there is a potential that those could be looking for physical delivery. And the fact of that is really what could cause a short squeeze. That's what we're looking at is the physical delivery aspect. And the only remedy for that was higher prices. If in order to people to not want physical deliveries if the price is high enough.
Yeah, if it gets beyond value, basically one could argue. But in terms of that, and speaking to your points there, open interest, I noticed the CME numbers, they're hitting record volume numbers in terms of option open interest, or volume, I should say, in terms of the options. And I also wanted to point out that we're seeing, I heard over the weekend, just demand for physical bars, physical coins really overwhelmed some of the online dealers. So that's kind of an interesting twist on it as well. What does this all kind of transfer out to and mean as far as gold? Is there a ripple effect here in terms of this?
Well, yesterday was very interesting because we saw silver surge and we saw, gold really try to follow along, but the dollar was higher and the dollar strength really. A little
bit of a headwind.
It held gold back. We're starting to see inflation show up. So actually, Treasury market's down. Yields are higher today. That's also holding gold back. Gold's really not participating in it. I think for silver to really break out above, say, let's call it 31 bucks. For silver to break out above $31, that's where this a squeeze would take place. Gold needs to participate, and gold just hasn't. So the interesting thing is the dollar right here. We have jobs later this week. We had some really good ISM prices, not so much in the ISM headline manufacturing yesterday. We have ISM non-manufacturing later this week, some data out there, Fed speak, John Williams today. So a lot of things can move this dollar. Obviously, I think you mentioned the RBA last night. So a lot out there that could move this dollar. Where the dollar index about 91.25, some resistance. The dollar starts to retreat. That's going to really help bring a tailwind to the metals. For us, it's not about the hodl or something. We approach the market. I even put in my research yesterday. We've been extremely bullish and really ramped up our bullish bias that we put out every day last week when this was taking place on Thursday. And I said, listen, you got to take profits. You got to secure gains. So, I mean, if you're not taking at least a quarter, but you should be taking probably a half off or so, then you're not doing it right. And then really what you see here is can silver hold ground out above that gap higher, and it's coming into support at $27 today. We have a constructive session consolidating above 27 today. We could build for another move. But again, gold's got to participate. The dollar's got to participate lower, and gold has big support at 1830. There's some minor support at 1840. So can these contracts see construction, silver and gold against support levels, and can the dollar stall at resistance? That's what's going to matter today. I'm considering today a consolidation day.
Yeah, and everybody, don't forget, we also have, Bill just mentioned the RBA, a contributing factor, but also the Bank of England coming out. I think it's on Thursday, right? I think it's the 4th of February. They'll be announcing their rate decision. So something to keep an eye on there, because the pound actually had been pretty firm recently. I wanted to get your thoughts here, and just real quick, if I just speak to the long or that bullish silver position you talked about, Bill. I think it was, we've been watching silver, and it has been lagging in many ways, still kind of supported by some of the industrial aspect of, tied to that metal, and certainly the electrical components or need for it as we see the growth and that transfer into electrical vehicles and expectations for more stimulus and infrastructure to come. It's going to be needed, it sounds like. So not surprising to see the demand there. Bill, as we look, go ahead.
Spot. Platinum.
Big time. I was wondering if we'd see platinum move.
Platinum has actually outperformed very well in recent weeks and recent months, and there's some resistance up there that it can't really get through 1200. But everybody should have platinum on their radar, because if you're talking about sort of that rare earth metal, you were saying for the green earth move, the green climate move, and that's important to bring in platinum as a proxy to all those rare earth metals. So platinum should be on your radar. Silver, we expect silver and platinum to outperform gold this year. I'll kick it back to you there.
No, I like that, Bill, because, I was actually wondering where things would go with platinum and palladium, because we keep hearing from the Biden administration about how these constraints on some of the emissions are going to be kind of brought back into play. And ultimately, we know that platinum or palladium can be kind of interchanged and used in catalytic converters to minimize some of those pollutants and emissions. And ultimately, these are products that trend very well, Bill. So as student of price, ultimately, we need to watch these, whether we're trading them or not, just to learn how trend works. I was going to ask you, though, what are we looking forward to into the week? You mentioned some of the data earlier, the manufacturing data. I saw it's kind of a quiet day today, it looks like, but certainly a lot of focus on the jobs data as we move further and into Friday.
Yeah, the earnings are really going to be very relevant here, and the stock market's consolidating. And I think overall, you're seeing the little spurts of panic last week in the equities, and some panic on Sunday night, which is a terrific buying opportunity, actually. When you see some panic like that on a Sunday night, we're consolidating, and I think they want to see what we're getting out of the earnings. And I think the jobs data is important, because we had the fiscal package that was passed in December that does start to get some money out. It's barely been used at this point, I believe, and get some money out that can help secure jobs. And so I think we lost jobs in January, or for December in the January report. Now, can we add jobs back in January on this report later this Friday? That's going to be front and center as the week kind of develops in how are these earnings. So I expect the stock market, I was expecting to rally back, and there's some good resistance at the S&P, about 38.25. I'm going to watch today. If we don't get out above 38.25 with this early strength and we start to stall, we could see some selling into there now as the market sort of consolidates back into what could be more of a range of Friday settlement ahead of the latter half of this week. But we do have John Williams speaking today, and as the Treasury yields start to tick up a little bit, that's something people got to pay close attention to, because I think that we could, sort of migrate back to 1.25 towards 120. And if this Treasury yield gets out above 1.25, and you start to see a really decisive move below 136 in the 10-year futures, that could weigh on the stock market, and that could really pick up steam in the 10-year. I think a move below 136, 135.5 could really quickly move, and that would bring a quick move to 1.25 to about 1.5% in the Treasuries, and that's, I think, is where the pain is. That's where the market would wake up. So I'm bullish the stock market, but those are some of the things I'm watching as the week develops.